Welcome to the Allo Capital podcast. If you're just joining us, we are summoning Allo Capital, a new spin-out from Gitcoin that's designed to build the capital allocation layer of the tokenized internet. I think there's big upside here. Capital allocation is a multi-trillion-dollar design space. VCs, governments, NGOs, and DAOs all have to allocate capital to survive and thrive. But it's also a place where we can start small. Every time you spend money, you are allocating capital. We are threading a through line, partnering with builders, researchers, and funders to figure out what on-chain capital allocation looks like and building it on-chain. If you want to learn more, you can visit our website at allo.capital, where you can download the Allo books for free, play with some of our dApps, join the Telegram, or participate in the Proto DAO. Alrighty, today I am going to run a podcast that I was a guest on, in which we talk with Vaughn from Butter, a new info finance platform, about prediction markets and Futarchy. Futarchy is a way of applying prediction markets to fund ecosystem public goods. And Vaughn has just rolled out a pilot with Uniswap, where they are running Futarchic markets in order to support things in the Uniswap ecosystem. So I think Robin Hanson, the creator of the idea of Futarchy, is just an absolute gigabrain. I think that Vaughn is executing on the vision of Futarchy really well. And this is a really great example of how amazing capital allocation can be in the post-tokenization, post-AI internet. So I am pretty excited about Futarchy, and I think this episode will be a fresh listen for you if you're trying to understand the capital allocation layer of the next internet. Hope you enjoy.
All right. Hey, everybody. We're here to talk about the Uniswap Foundation and Optimism and the experiments that they're running with conditional funding markets as a way to provide grant allocations. We have some incredible experts on the call. So the Uniswap Foundation team is here, Optimism, Butter, Allocation Capital, and Ethereum. The Uniswap Futarchy experiment is live, and you can get involved today to help decide what lending protocol receives $100,000 worth of grant funding. You can head to the Uniswap Foundation X's account or Mirror to learn more. Awesome. Let's get started with introductions. Aaron, can you kick us off?
Yeah, my name's Aaron. I'm the head of governance at the Uniswap Foundation.
Stay muted. Awesome. Next up, Eliza.
Hey, great to be here. I'm Eliza. I'm the research and experiments lead at the Optimism Foundation.
And Benji?
Hey, I'm Benji, and I'm a contributor to Ethereum.
Awesome. And Vaughn?
Hey everyone, I'm Vaughn. I'm one of the co-founders of Butter, and I'm the person in charge of sending emails and making espresso.
Great. Thank you. And last up, Iwaki.
Hey, I'm Kevin Iwaki. I'm mostly known for founding Gitcoin, and I'm still contributing to Gitcoin, but I'm working on a new venture called allo.capital. We're studying how capital allocation is going to change in the post-AI, post-on-chain internet. Glad to be here.
We are so lucky to have you all, especially as much as you've been thinking about grant allocations for many years. I think this group is some of the best experts in the space. So Aaron, could you actually tell us a little bit about the Uniswap Foundation's governance innovation effort?
So the overview in our work, our goal is to build governance systems that increase the resilience and the credible neutrality of both the AMM, the Uniswap AMM, and the protocol that governs. CFMs are our biggest swing so far in this direction. We're also considering things like optimistic governance, dynamic UDOs, a bunch of changes to our current system that we're excited about exploring. So watch this space as we continue to do more.
Thank you, Aaron. Now, Benji, as we dive into Futarchy, could you explain it to me like I'm 5?
For sure. So, okay, one way to think about Futarchy, like you're 5 years old, is, okay, let's imagine there's a community that wants a new playground, right? And the goal of this playground is we want every single kid in this playground to be happy, right? First, we vote on that goal. So, which is like, yes, overall, we care about having happy children. Then we open a tiny market where anyone can basically allocate their vote in some sense on which playground design will create the most smiles per year. So you have a metric. You want to build a playground, you want kids to be happy, that's general. And then now the metric which you measure it is smiles per year. And now there's various different playground options, right? So each participant can now basically bet on some sort of a playground outcome. And each vote, which basically shifts the price. And the design with the highest price wins the funding. So the magic behind this is like the only people who really, really believe a design will work will risk their tokens or risk their vote. So the crowd's wisdom can get weighted by confidence instead of just volume. If we were to do it in like grown up words, it's like we essentially lock in values up front and let price signals pick the smartest execution path. So it's like instead of just having chatter, you have measurable forecasts. Thus, like instead of just voting on something arbitrarily, you actually have quote unquote skin in the game. And this can create different realms, which we'll dive into a lot more, where it comes like it helps people feel more involved in governance. It helps every vote that you put in to feel like there's more at stake for you. And actually can invite more people to start participating in governance as a whole. And allow even more experts to participate in governance and things as a whole, because there's like, maybe you're a playground connoisseur, maybe you know how playgrounds work. It's like, you're going to join this market and, you know, put your thoughts in by literally putting up capital at the front for the idea that you want to back.
Wow, that's incredible. So more participation from people and better signals in terms of what might provide value. That's great. And this brings us perfectly to Owaki, who's been thinking about grant allocation for quite some time. How do you think traditional grant allocation can be improved?
Yeah, so we've been following this for about 5 years at Gitcoin through Gitcoin Grants. Gitcoin Grants has distributed about $70 million through 24 grant rounds in the Ethereum ecosystem, and we've been studying the ecosystem. I think traditional grant allocation falls short because there's slow and opaque decision-making. Committees or foundations may take months to review proposals with unclear criteria or feedback loops. There's misaligned incentives. Funders may prioritize political safety or reputation over actual impact or innovation. High overhead and limited scalability. Manual review processes can't scale to global or open ecosystems like Ethereum and other open source softwares. And there's just a lack of feedback and iteration. Grantees rarely get actionable feedback, and funders struggle to track long-term impact. So I think the way that we improve this, and we're really lucky to be working in the Ethereum ecosystem, we can bring on-chain mechanisms to make grants better. So on-chain transparency can make funding flows auditable, programmable, which really increases trust. Retroactive funding, I think, can fund outcomes instead of promises. So I think Optimism has been the big pioneer with retro funding in this space. I'm really excited about a future in which we have plural funding models, quadratic funding, retro funding, conviction voting, deep funding. I can keep rattling off all these mechanism words, but they all work together. And so I think that we're going to see ecosystem with continuous and modular allocation of capital. And similar to how we send information being completely changed by the internet, I think the way we allocate capital in the 21st century is going to be completely changed, and Futarchy is definitely going to be a big pillar of that. So excited about this pilot.
Yeah, very. Thank you. It's incredible to get to hear the background and how many experiments have been run, and that, you know, this is a new opportunity. So Vaughn, perfect off the back of that, why did you decide to build Butter and conditional funding markets?
Yeah, that's a great question, Kristen. I think about 2 or 3 years ago, I'd spent a bunch of time in the crypto ecosystem. I've been here since since forever. Actually, I was saying earlier to someone that I saw Bitcoin at like 36 cents when people are just throwing it back and forth inside like Bitcoin forums. Having watched the ecosystem mature since then, I'm really trying to find the one place where I could apply my interests and skills. I just kept coming back to the fact that governance felt like the place where you could just get the highest leverage. I think it's really one of the hardest things to do to change governance. I think we live in a world that's kind of designed around the institutions that humans have built. Some of them have been around for decades, centuries, and they very rarely change. And with crypto, it feels like we get an opportunity to really build institutions from scratch. It doesn't mean they're hard to build, but if we do get to build them, I think we can have like seismic change in the way the world works. And that's why when I met Alex, my co-founder, and I described this to him, we kind of clicked straight away. I think he was actually one of the people trying to build DAOs on Bitcoin. So yeah, I think we're both kind of aligned on that. Like, this is the place to spend time. And honestly, I think that, even though it might seem strange now, governance will be one of the things that crypto ends up exporting to the rest of society. Even though they look strange and a bit broken, I think that we have such an incredible design space for governance and obviously mechanisms, that because we get to iterate really fast, we'll get to build things that you just couldn't build in the traditional, in the kind of, I guess, the trad world. So that's kind of why we're working on Butter, and conditional funding market seems like, this like thin wedge where you're combining governance with capital allocation. And I think that means that we get this like really, really good return on our investment by building these tools, because they scale well, they deal with things that people can quantify. And that's why we spent some time on conditional funding markets. So yeah, we're really excited about what's happening right now.
Awesome. Yeah, it has been an exciting time, certainly the last year that the UF has been involved. So Eliza, we're going to get to some results later, but to ground us in Futarchy and grant allocation, can you give us a brief overview of Optimism's Futarchy experiment?
Yeah, absolutely. So first, I'll touch a little bit on the motivation, why we're interested in implementing this, and then I'll just quickly break down, give an overview of what it looked like, what exactly we were doing. So kind of, as Iwaki and others have touched on the last couple of minutes, making grant allocation decisions has historically been pretty difficult for DAOs, and making other predictive questions. Current existing structures such as councils tend to be less scalable, less transparent, more centralized. And so for that reason, we're interested in exploring alternatives. And why Futarchy as the alternative? The primary motivation is just that Futarchy is supposed to lead to more accurate decisions by actually incentivizing accuracy. So if we hold the decision makers accountable for their grant allocation decisions, that is, reward them for accurate decisions, and in many cases penalize them for inaccurate decisions, then this should lead to more accurate info aggregation, which is something that we as DAOs making collective decisions really want to get to. And there's also this nice aspect of Futarchy leaning into wisdom of the crowds, and encouraging kind of this broader, more permissionless participation. So with all of that in mind, we decided to test this in the wild. And the specific question that we were asking with this V1 experiment was, is Futarchy a more effective way to make grant allocation decisions than existing approaches, such as the Optimism Grants Council? Specifically, do the projects selected by Futarchy see a greater increase in our outcome metric, which was increase in superchain TVL, than the projects that were selected by the Grants Council that ran simultaneously? And so basically, back in March, we opened up these conditional funding markets built by Butter that ran for 10 days. And we had anyone interested, with some caveats about some KYC and bot protections, could participate as forecasters, and basically influence actual grant allocation decisions. That closed, and then 3 months later, that closed, and the top 5 projects were actually given 100K OP grants each. And the Grants Council also selected 5 projects. And then 3 months later, so just a couple weeks ago, at the end of our governance season, we were able to look at the actual increase in superchain TVL and see how that lined up with the predictions. So yeah, we'll dive more into the results later, but that's a little overview.
Thank you all for those incredible overviews of how you're participating and your firms are participating with Futarchy. So let's dive in a little bit deeper. Iwaki, Robin Hanson, his original Futarchy concept was, and I've said this many times, vote on values and bet on beliefs. Can you break that concept down?
Yeah, sure. I think Robin, in addition to being a great mechanism designer, is also a great meme lord. There's alliteration there: vote on values, bet on belief. respect. So vote on values basically means that citizens get to democratically choose what matters most in the concept of a nation state. It might be GDP growth or public health, or Aaron said smiles per participant. I think that's a fun one. For blockchain networks, that might be TVL, or that might be block space consumed, or in the case of Uniswap, I think it's the amount of money going through the protocol. So the values are what goals matter most, and we're going to vote on those. Betting on belief means that prediction market participants can bet on which policies will best achieve those goals. And I think a key thing here is that there's skin in the game for the people who are betting on beliefs. You actually get upside when you get the beliefs right. So the outcome here is hopefully that we'll get policies that are highest expected success as judged by market bets. And those are the ones that are implemented. So we're really building a feedback loop where the policies that have the most success, which is what we want, the values are being guided. So vote on values, bet on beliefs, I think is a really elegant way of designing an ecosystem and allocating capital.
Yeah, that makes sense. He is a meme lord. I think if no one has met Robin Hanson, I highly recommend it at least once in your life, especially at one of Butter's hacker houses. And Vaughn, that's a really good intro for you. How do you conditional funding markets aggregate information better than traditional voting? And how do you think about this concept of voting on values and betting on beliefs?
Yeah, I think it's as Kevin said, I think it's a great phrase and something that we refer to all the time. We obviously spend a lot more time on the betting on beliefs than we spend on the voting on values at the moment. But eventually we'll get to the voting on values part. So let's maybe just ignore conditional funding markets for the moment and just talk about this like information problem. And if we think about voting, let's say we just start with votes and the way that we vote for things in, say, crypto, but even larger, most people have some experience with voting in for like an election. The question is going to be, when you vote, what actual signal are you inputting into the decision mechanism? So we're going to elect a president. And what you normally do is you think, what would I prefer? What would be best? What would be best for me? And then you select whichever you vote, basically for whichever candidate is going to maximize your own preferences. And so this is a type of information. It's like preference information. But let's say we didn't actually want to know who people prefer, and instead we wanted to know which president would actually grow GDP, or, as we said before, make everybody happy. And then if we were to ask people to vote, it's very unlikely that they would give us that information. You know, we say, well, which president do you think is going to make everyone happier? And what you'll get is basically what people prefer, right? They won't tell you exactly the information you want. They give you this preference information. And so this is kind of a problem, right? It blunts our ability to actually get make better decisions, because we constantly just get the wrong signal from people when they vote. And so with markets, what we try to do is we try to like design the information space. And I think what we can hopefully get out of conditional funding markets is we can design a market where what people are going to bet on or trade on is the impact of a funding decision. So rather than saying who should we fund, we say, if I were to fund X, what would the impact be on Y? If I were to fund, if I was to give $100,000 to Ethereum, what would the impact be on, I don't know, the gas limit, for example, or like Ethereum fees? And so what we then can get from markets is like accurate information about what's going to happen. And the reason we can get that information is because people have a financial incentive to get that information right. If we design our markets well, we design the contracts in those markets well, then what we can make happen is the closer people are to the actual outcome, the higher their eventual payoff. And if you think about it, that's kind of what you want as the decision maker. If you were going to make a decision, you'd want to maximize your own payoff. The problem is normally when you delegate that decision to a whole group of potential voters, they tend to not give you something that maximizes the payoff you want as a decision maker, but instead what maximizes their payoffs. In conditional funding markets, what you're going to get is the actual outcome that maximizes your payoffs as a decision maker. And that's why conditional funding markets look like they could be much better than just having people vote on their beliefs, right? Which is this preference information.
Vote on values, I think. Bet on beliefs.
Yeah.
But you could also, I guess, vote on your beliefs as we think about that. And so, yeah, it's interesting that because you ground the decision in a metric that you're trying to improve, it has a different impact than just holistically saying that you are going after, either this proposal or this president or whatever the case is. So you're actually moving towards a shared goal that isn't necessarily descriptive if you were voting on a proposal or for a president, as that example had. Let's find out a little bit more. Owaki, how does this compare to the quadratic funding and other mechanisms you've worked with? How do you think of conditional funding markets or Futarchy as compared to some of the other options when we think about grant allocation?
Yeah, I mean, I think the core thing here is to use the right tool for the job. None of us should be mechanism maxis. We should be problem solving maxis. And I think the core idea behind Futarchy is to vote on values, but to bet on beliefs. Whereas, where I come from, Gitcoin has historically been known for quadratic funding. Quadratic funding is the core idea there is to measure broad community preference and support. So you can kind of think of Futarchy and quadratic funding as two different tools that solve different problems. Futarchy is using prediction markets to solve for policy effectiveness, and quadratic funding is optimizing for the number and size of community donations, and it's aiming for broad community preference and support. So if you wanted to fix a problem in your house, I think you should choose the right tool for the job. And it just so happens that a screwdriver and a hammer and pliers are all just totally complementary tools to each other. And I think quadratic funding, retro funding, Futarchy, deep funding, all these different mechanisms are complementary to each other. And we're seeing the development of an ecosystem growth capital allocation toolbox. And I'm really excited to see how these tools complement each other. And the plurality of these tools, I think, is a totally positive sum game. So we'll see where it goes. But these are different tools for different jobs, I think, is the TLDR answer to your question.
Yeah, it's a great point. I think that there's lots of ways that we need to create collective decision making. And I love the word mechanism maxi. It's better to do it via mechanisms for credible neutrality purposes. And how we learn to apply then is actually so much of the experiments we're running. So in just a minute, we're going to get into the experiments. But before that, one more question for Vaughn and Owaki. But first one to answer gets it. Why does skin in the game matter for decision quality? So why are CFMs having people put money on the table? What is that adding in terms of value?
I can jump in now. And there's a great quote which lots of people have sent me. It's by an American economist called Thomas Sowell, and it says, I'm going to just read it. It is hard to imagine a more stupid or more dangerous way of making decisions, and by putting those decisions in the hands of people who pay no price for being wrong. As the principal, i.e., we are the other people in charge of making these decisions. That's who we are as like people who own tokens or participate in these economies, these crypto economies, participate in these networks. We're the people who ultimately pay the price for whatever the decision makers end up making. And if we delegate that decision to someone who can just make the decision with no recourse, right, then we end up paying the price. And so what we really want is to have decision makers or whoever we delegate the decision to have the exact same set of incentives as us. Like if we benefit, they benefit. If we lose out, then they lose out. And unfortunately, in society, we have lots of institutions where that's just not the case. And this is the core principal agent problem. And what markets do is they make sure that people have skin in the game, and that those people are the ones that make the decisions. Like, so you're betting rather than just voting. And I think this is kind of increasingly, I guess, like in some ways we try to solve this with token voting. The more tokens you have, the more say you have. But ultimately, as we added in delegation, that has become like, less and less true. And so it's just trying to make sure that we always make sure people have the skin in the game when they're making decisions.
That's an awesome answer. Owaki, anything to add?
Yeah, I mean, I just think that skin in the game is a meta primitive for good mechanism design. So Futarchy achieves that. And I think there's going to be another category of mechanisms in info finance that create that in the future. So the frontier is mechanisms that create skin in the game.
Benji, perfect question to ask. Can you give us a little bit of detail and definition of info finance, and then walk us through a summary of this section where we covered Futarchy fundamentals and some CFN mechanisms?
Yeah. So info finance, I think one thing we can we can like attach towards this idea that markets are truth machines. When you purchase something, when you invest in something, you're basically showing conviction. Whereas like votes may be clicks, a Futarchy market, when you like invest in it or bet on a certain outcome, it's conviction. What that leads to is some really interesting things, like as you mentioned, as Kane Fawn mentioned, skin in the game. I think a recent example right now is a lot of things within the realm of governance, crypto and beyond, is this idea of apathy, right? Like you vote on something, you forget about it, and it's over. You've already voted, it's done. Having a live market attached to this actually makes you probably more interested in learning and researching about your vote. That kind of fixes apathy, where suddenly you might start caring about things. And even if you're not even in the system per se, you might suddenly start like seeing an opportunity and getting into it through this Futarchy market. You might care about things that you may never have thought you'd care about. Right now, a lot of people are caring about whether or not Zelensky is wearing a suit or not. Right? There's like entire threads. Like people spend hours and hours and hours on this idea of suit. Like, is this a suit or not? That's something that fights apathy, because now you've attached a market and you've attached conviction to people's bets and votes on a market, such that it kind of allows people to actually do deeper research. What this leads to in governance is like more critical thinking when one is quote unquote voting, and probably like just more of a live market outcome where votes may change over time as well. And you can kind of like flip back and forth depending on what the highest opportunity is. I think there's a lot of like interest that this can bring to the world, especially when it comes to like CFMs and the markets that we're talking about specifically here. Like it basically adds this layer within governance where you're not just voting on who gets a grant, you're voting on who is the most likely to succeed when they get it, and how much live information can you take in and how much research can you do when you make that decision. So it almost like magnifies the weight of your decision, and as such magnifies the research that you put in when you do it, which thus cures apathy. And then lastly, I think personally what I find most interesting is it invites experts as well to participate in something that previously they may not have had direct interest in because they may not be in crypto or whatever the case is. I think this opens the chasm for that.
Yeah, very interesting. It is incredible how this provides better access for people, more decision making. We do have an opportunity to raise information from more people. And then most importantly, I actually don't think we have a lot of technology used for collective decision making right now, whether you are part of an HOA or you're part of the US government system. There is not a lot of technology leveraged in those. And so it is an interesting time to actually be deeply involved in this. Okay, let's start to dive a lot deeper into how Optimism and the Futarchy experiment went. So, Vaughn, first walk us through how a forecaster actually participates in CFMs and earns rewards, and how that was applied for Optimism.
Absolutely. So we can start with the general case. Let's say that you are, as I mentioned before, you're inside one of these ecosystems that says Optimism with Uniswap. There's a grant that's coming up, and maybe you have been elected to the Grants Council. You'll get some information about the grant applicant. You'll read through it. You'll think about Optimism's goals. You'll think about their goals for that season and so on. And what you're trying to figure out is where Optimism can best use their grant money. And you'll have maybe a set of goals and imperatives for that season that you'll try to map to, and you'll kind of go through some rubric or some process. And the output will be a set of decisions. And so that's now kind of, and one of the things that I think is important to mention is you have some set of incentives, right? You're incentivized to make sure you maintain your position in the Grants Council. You're incentivized if you have some, let's say you've been in Optimism for a while, you maybe own some OP, you care about the ecosystem, and these are kind of guiding your decisions, right? You want to make good decisions. But maybe your actual performance on any individual decision doesn't necessarily matter as much as the overall, your overall contribution. And now let's think about you being instead a forecaster. You're in the wild, you're in the markets, you just have to figure out what's going to maximize your own payoffs, right? You're not part of any particular organization. And as a forecaster, you can go out and gather information on the same thing. So you can think about the grant recipient, the potential recipient or applicant. You can think about the amount of money being spent. You can think about the goals. But when we design a conditional funding market, as a forecaster, your actual payoff is tied directly to the output of that grant recipient. So you're really going to have to think about whether a project saying they're going to produce a certain amount of TVL is the same thing as them actually producing that amount of TVL. You can't take things at face value, because if you get that wrong, if you maybe overestimate because you were told that they would produce a certain amount of growth, then you will just lose money. Every single time you buy into those markets beyond what that team actually ends up producing, let's say that they estimate their TVL will be $100 million, and in the end they actually produce $15 million, then the everything that you bought from $15 million up to $100 million is just lost money. And so what you end up with is basically a ranked list of who was more accurate. And you want to make sure that you're at the top of that list, right? Maximizing your payoffs. So this is the difference. As a forecaster, your job is to go into one of these conditional funding markets and really try and forecast exactly what the impact will be of the grant. And the more accurate you are, the better your payoffs. In Optimism, we didn't use real money. We used this play money token. And so the incentives were slightly different. But the basic model was exactly the same. You were given some amount of tokens, and your job was try and maximize those tokens. And you took positions in each of these markets. For, let's say, balance from beats, you had to figure out what their TVL would be if they received the grant, and you had to try and estimate whether the current estimate was too low or too high, and adjust that by making trades in the market. One of the things that we found was slightly problematic was just that because people were just receiving these tokens for free, and it didn't necessarily matter if they made a return or not. We found that some people just treated them like voting tokens. So they just turned up and voted. And again, that meant that the signal was a little bit muddled, but we expected it. I think it was one of the benefits was that we got to run this really early, and we got some really good data about like how people will use it, the way they think about it, and so on. So I think it was a great outcome.
Yeah, I mean, to the question about skin in the game, there was not skin in the game with an OP play token, though you did have to be participatory in the OP world and catching up on that.
Yeah, just quickly on that.
All of that. Yeah.
Quickly on that, I think one of the things that still happened is there was a kind of skin in the game because there was still a reputational component. So your reputation was translated directly into attestations, which are translated into an actual balance. So that's really how we tried to bring in other forms of skin in the game. But also you could just not trade, right? If you didn't want to wager your reputation. And then we still made sure that there were rewards as well at the end.
Awesome. Thank you, Bon. I have been dying to hear from Eliza and hear about the results from the Futarchy experiment and how you compared that to the Grants Council. So I know that you put out an incredible blog on this, and I really appreciated seeing it. But could you tell us in your own words the comparison between the Grants Council and Futarchy?
Yeah, absolutely. And let me just, add a quick 2 fingers to the points just now about skin in the game. I think this is a very key difference that is worth keeping in mind when we talk about the findings and the conclusions from this single experiment. The fact that we didn't use real money does certainly change some of these incentives, right? And I'll kind of talk through how maybe that might have influenced some of the things we saw. But it's also worth keeping in mind, I think, as some of the first here, at Optimism, Uniswap, really the super chain being pioneering this implementation of Futarchy for governance, that comes with some of these constraints and challenges, right? So like in this case, there are a lot of legal concerns about the risk to forecasters. And we also had smaller sample size of projects participating, which makes it trickier to really infer with confidence some of the effects of the things we're studying. And I think in the case of Uniswap, shipping this in the wild with real money, there's questions about liquidity and, a whole host of other challenges. And I guess it's just worth keeping in mind, we can still learn a lot from these, operational product user related things. And it's, while it does change, some of the theorized ideal implementation and motivation for Futarchy, there's a lot of exciting learnings of like actually being among the first to do this. That being said, let me just touch on some of the key takeaways from my mind from what we learned. So I guess first one, interesting insight for us was just who was interested in participating, especially in this setting with play money. And we were pretty pleased to see that there's pretty sustained interest throughout the 10 days. We had about 432 active participants actually connecting wallets and doing multiple transactions to participate, pretty engaged in our various discussion forums and Telegram chats. And actually, interestingly, the vast majority of these forecasters came from outside of our Optimism governance ecosystem, which was interesting because we actually tried to attract internal governance folks by offering them a higher amount of baseline play tokens, because we thought that could kind of proxy for conviction, which you normally would get with real money, right? So kind of an interesting insight, over 400 diverse active forecasters. As far as actually comparing the increase in TVL among the projects selected by Futarchy and Grants Council, like you asked about, this was pretty interesting. So as I mentioned earlier, both of these decision-making bodies operated simultaneously, and they reviewed the same set of 22 total projects and were asked to select 5 to receive 100K OP grant each. And Grants Council and Futarchy actually selected 2 of the same projects. And then of the remaining 3, Futarchy did outperform the Grants Council in terms of identifying and selecting projects that saw a greater increase in about a 3-month period, slightly under, is about 84 days, of superchain TVL. However, it's worth flagging here that that effect was almost entirely driven by Futarchy selecting an outlier, Balancing Beats, which Grants Council narrowly ranked 6th and missed the cutoff. And so here, all of the caveats about making conclusions with small sample sizes apply. And, if we were to repeat this many times, maybe with more projects, that would be interesting to do. And hopefully we can do. But, I think at the very least, this shows us that Futarchy did at least as well in terms of selecting these projects, and actually not too different. There's a decent amount of overlap. And even if you look at a bit farther, among the top 10, the majority of projects were selected, maybe in slightly different rankings. Something else that was kind of interesting to me that stood out in the data that I think merits further exploration is the fact that Futarchy seemed to have higher variance in the types of projects they selected based on this metric of superchain TVL increase. So basically, while Futarchy successfully identified the 2 highest performers in terms of superchain TVL increase, they also selected a project that was much worse than any selected by Grants Council. And Grants Council projects tended to be a bit more stable and closer to the median. So maybe that suggests that forecasters are more willing to bet on high risk, high reward projects, whereas Grants Council committee structure maybe favors lower variance selections, more predictable outcomes. Would be interesting to explore that a bit more. And then, as Vaughn kind of touched on, another question we had was just how accurate were the predictions themselves? And we saw that the predicted increase in superchain TVL by the forecasters was considerably higher than both the estimates that the projects provided in some info that was shared with the forecasters and the actual increase. And a lot of this is probably driven by the play money environment, where there's no penalty to pushing up a price and actually being able to influence future grant allocation decisions. So this decision piece as well definitely influences this. But that was definitely a takeaway. And will be interesting to see with Uniswaps. I think so far the predictions are already looking, much closer to what we would expect. And so, tying that all up, we're definitely interested in continuing to explore Futarchy as a more decentralized, stable, transparent decision-making structure. It'd be great to improve on the design and address some of the challenges, adding real stakes, real downside to kind of drive this accurate decision making quality, and increasing the sample size would be some main ones, and being maybe a bit more thoughtful about the outcome metric, how it's denominated, or confusion with how questions are asked. Lots of learnings there. But basically, we think moving forward, Futarchy seems like there's definitely some potential for decisions, especially concave decisions. So decisions that benefit from the wisdom of the crowds, decisions that could really benefit from having that incentivized accuracy to draw out otherwise inaccessible information, and especially in situations where scalability is important. But kind of like was discussed earlier, this is one tool of many, and we still think, expert bodies such as councils and committees serve a purpose as well. And those types of decision-making structures might be more useful for decisions where maybe they suffer from forced compromises among large groups of non-experts. So those are often called context decisions, or decisions that require a high amount of historical or optimism specific context, and are otherwise supported by high touch processes. So, that's all to say we're excited to keep iterating and using this as one of many tools.
Absolutely. It is so interesting to me how many places you can apply it, and also like how much you learn in every single experiment, and that this is really like the second major experiment we've had here at this scale. So it is exciting. So Benji, what governance decisions beyond grants could benefit from Futarchy?
Yeah, so I think pretty much any type of governance decision works here. Like we've talked about, what it kind of creates is this realm where, there's multiple different realms. The one that I'm most interested in right now is like, how do you bring more minds into crypto? Like, how do you actually like bring more experts into these decisions as well that may not be in the system today, but we could all use their expertise. We're seeing this stuff kind of play out on like Polymarket, for example, but that's like your outcome is you winning something. In governance decisions, the outcome is something actually ends up happening. So any sort of market where any governance system wants to like pick literally anything, it can start inviting, it can create a market for it and start inviting new minds to help facilitate with that. Not everything's about funding. Like sometimes things are going to be about allocation of funding. Sometimes things are going to be about, what they're going to do as a next strategy. Sometimes things are going to be about like an event strategy, and you can be even more and more granular with this, and you can actually invite the community to bet on their beliefs a bit more. So for example, like maybe if it's grant funding within DeFi, maybe a person that you want to kind of be involved in a discussion and have like some sort of a vote there is like an expert within DeFi that's like very much like maybe outside the system, but is able to kind of talk about their views and maybe even convince people about their views. And I think the open market really allows for that to happen. But if you're doing an event strategy, for example, and you're proposing this to a governance community, and it's like, hey, what should we do? Maybe you want an events lead. Maybe you want a marketing lead. I think what this creates is this diversity of voices. The market is probably the most diverse voice. I think crypto is a reflection of that. Crypto is the most open market ever. And that's why, it's volatile sometimes. That's why there's like so many different like views and perspectives. But how can we channel that diversity and that access towards decision-making within basically essentially anything really? And again, with the top line goal of like, let's make people feel more involved in governance. Let's people have more conducive dialogues. Like it's not about who the loudest voice is. It's about who is able to kind of like reason their points in the best way and convince others to also join their point. And I think that is applicable to pretty much any form of human behavior. And obviously governance within crypto is like a big star for that.
Awesome. Thank you, Benji. Let's also find out about the current experiment that we're running with the Uniswap Foundation. So, Aaron, you started with lending protocols in this experiment. And for those who don't know, you can actually go to the Uniswap Foundation's X account, or you can go to Mirror and you can figure out how to participate and get involved in this, put your own skin in the game. But Aaron, tell us a little bit about what's going on with the CFM experiment with Uniswap. So why lending protocols, and then who's actually participating, and what's our timeline here?
So we started with lending protocols. I think I don't want to speak for everybody here, but in configuring the CFMs, one of the things that I think was the hardest parameter to sort of reason about was the metric. Like, what is the thing that we're asking people to measure? And we wanted something that was observable on chain and relatively straightforward. And if it goes up, it would drive value to Uniswap generally. Lending protocols are an important part of any DeFi ecosystem. Unichain, we're trying to build, the chain for DeFi, and it is a good thing if lending protocol TVL goes up on Unichain and it's observable on chain and it's like easy to reason about. So for the first experiment, we sort of landed there just as a thing that was good and a thing that was easy to measure. We have 4 great lending protocols who currently have open markets. In alphabetical order, it is Compound, Euler, Morpho, and Venus. We had, I think, 10 applications, and we filtered for teams that already had deployments live on Unichain and had a strong history of growing their protocol on other chains. In the future, I think this is part of the process that's still very manual, or from our perspective was still very manual. I think in this future where we see CFMs as this globally scalable funding mechanism, there's not going to be a gatekeeper like the UF to choose who has the chance to get funded. So that's a super exciting thing that we can figure out next. But as Eliza said, there's just lots of little pieces to kind of reason about and kind of configure manually as we're experimenting with these things with the goal of building this funding robot that can kind of do all this automatically in the background. So those are the teams. Timeframe, today is day 2 of the first round. They opened yesterday. The first round closes on Friday, at which point the team that the market judges to have the best chance of growing TVL the most on Unichain will receive a $100,000 grant from the UF. They'll have 3 months to put that money to work. And in the meantime, we're also running a second round in the beginning of August 11th to the 15th, with the same 4 teams. The top 2 teams in that round will receive $400,000 to grow their TVL on Unichain. So yeah, and then I kind of take one step further. I think thinking about how this fits into our broader governance strategy, I think Kevin said it really well. This is a tool in a toolkit. This is one of the things that we want to experiment with and refine. And if it makes sense, we're going to continue investing in that refining process. But also, and Kevin, you left one hanging earlier where you said something to the effect of there's another mechanism out there that I think does something similar. And I'm interested to follow up with you on what that actually was, because we are, continuing to research and find different tools for governance to be able to allocate this capital to grow the Uniswap protocol. So 900 grand in grants to run these experiments and learn more about how CFMs work and how we can implement them in a more effective way in the future. But doors always open to thinking about different mechanisms and different ways to manage this allocation.
All right. And Aaron, one last question. How much is allocated to this experiment?
We're doing $1 million over the course of 2 rounds. 100,000 of it is going to be used for liquidity incentives, and 900 grand will be allocated to across those 3 separate grants to lending protocols.
Yeah, I think it's important that those were at scale, and so really exciting that this experiment can be at that level and that scale. So I want to find out how people who are watching this can actually get involved and get started and participate. So Vaughn, what should people know before depositing USDC? Is there anything that they should keep in mind? And where can people learn more?
Of course. So first of all, if you want to just participate, I'd recommend going to butter.markets. There you'll find kind of an explanation of the company, what we do, what we're building, what conditional funding markets are. And then you can just hit the button top right to go to the application. And there you should see the Uniswap or Unichain lending TVL conditional funding market, the 4 projects and so on. And to really just get started, there's a few things you can do. One, just look at the charts first. Have a look at what projects are doing. See what the markets predict their TVL will be. Figure out whether you agree. Do you really think that if, Venus, for example, is funded, that they'll actually produce a certain amount of TVL or not? I think, again, to make it really clear, the point here with conditional funding markets is to think about what the actual TVL would be in the event a project is funded or not. And not just betting on which project you think should win. That's the previous model. That's what we're trying to move away from so we can get more accurate results. But as soon as you have this well in mind, you'll see a button top right called deposit. What you want to do is hit that. Connect your wallet. Obviously, you're going to want to switch networks if you're not already on Unichain. And you'll need USDC, you'll need some ETH. And once you've done that, you can put tokens into your smart wallet. We have account abstraction built in, and then from there you can start depositing into markets. Now, obviously, this is not going to work in every single country. Some countries we have had to block, so that it's not going to be available in every country. If you're in one of those countries, you can still look at the app. You can still see the markets. You can still see the forecasts. But unfortunately, you won't be able to participate this time around. But there's a lot of places where you can. So if you're in one of those places, then please do feel free to have a look. And if you have any questions or it's unclear, we have docs. There's a nice chat button bottom right. You can click that. You'll connect directly to us. Also, there's a Telegram. It's just @ButteryGG. You can find us there. And again, ask away. No question is too stupid. And mostly people keep asking questions. Questions are good. Questions mean that you're trying to figure out where it's best to spend your time, and we're obviously here and happy to help you do that.
Thank you, Ron. Yeah, these markets are incredibly interesting, and they're interesting from the perspective of being new. And we heard from experts today how they are going to change and add another mechanism into how we think about governance. And so I recommend everybody follows along. If you have any interest in governance, any interest in markets, this is another example of how crypto is really leading the way. And if you can show up on, an early day and an early stage, I think you're going to be much more prepared for the future. Following the Uniswap Foundation's X account, that's where you're going to see a lot of the results that are coming out. Going to app.butter.markets, that's another place where you can follow along and see how people are thinking about the TVL that lending protocols will produce. And then I think you just want to join this Telegram. So Aaron, before we head off today, can you give us a better understanding of how CFMs and Futarchy contribute to the future and to a better world? So more specifically, thinking about credible neutrality for protocols and how this furthers the goal of credible neutrality.
Yeah, I'm going to crib from Vitalik and paraphrase, because I don't know it specifically, but he said effectively, like, a credibly neutral mechanism is one that anyone can use and expect the same outcome as anyone else. And our grant funding mechanisms across the space right now are not that. And Futarchy, I think, in its, the final implementation, when we get through all of this experimentation and have a stable mechanism, I think is that. I think it opened up the ability for any team in the world to contribute to a particular goal, and then, or to propose contributing to a particular goal, and then for anybody who has an opinion about whether their proposal is good to bet on that belief. And I think that just means that we are going to see a flood of new contribution or new talent contributing to, in our case, Uniswap, but in Optimism's case, the collective, and anybody else who implements this, pointing this huge flood of talent at a problem that is currently not accessible. So I think that's like a really exciting thing to think about. There's a lot of steps to go through to get there, but I think that, like, at the end of the day, that is why this mechanism in particular is so exciting to me, and I think just drives incredible value to the protocols that use it.
Awesome. Thank you, Aaron. And thank you, everybody, for joining us today. What an incredible opportunity to be part of something new, something that is, I do think, changing how we think about governance and beyond just crypto, but that is where so much experimentation and innovation starts.
You just heard from Vaughn from Butter and some members of the Uniswap ecosystem. I'm excited about Futarchy. I think it's a dope way of allocating capital. Thanks for listening to the Allo Capital podcast. This podcast features the people building the capital allocation layer of the tokenized internet. Thanks, Vaughn. Thanks, Uniswap, for inviting me as a guest and for letting me play this episode on the Allo Capital podcast. Disclaimer, this podcast episode is for informative purposes only and is not financial advice. Do your own research. Do not make any financial decisions based off of this post. In addition, I own crypto assets like ETH, DAI, USDC, and GTC. And I also did a very, very small angel check into Butter because I'm a believer in what they're doing. I think that Futarchy is a really interesting way of allocating capital in the new internet. All right, thanks for listening. I will talk to you soon. Peace and love.